One of the key criteria to being successful in investing is to always learn from the past. And as we saw in the 2008-2009 financial crisis, the housing market fell off a cliff. But if we actually go back and we look as to why this occurred, it's actually quite compelling. As you can see here in this chart, back in 2008-2009, that red line shows that housing was exploding upwards in value. And all of a sudden, starting in about 2004, the Federal Reserve decided to raise interest rates. The federal funds effective rate went through the roof, going up over 4.5%. And what followed very closely after was that housing prices collapsed. And you continue to see that red line trend downwards. Now, if you look all the way to the far right, you can see that housing prices have been exploding upwards. And in that blue line, you see that the federal funds effective rate is starting to creep upwards, now coming close to 1.5%. As we see the federal funds rate continue to climb higher and higher, it increases the odds that there could be some sort of housing collapse. Now, just because in the past housing prices went up and then federal fund rates went up meant that it crashed, that doesn't mean that it's going to happen in the future. But what we do have to be careful of is that U.S. housing is definitely in the danger zone. The odds are increasing that there could be a housing market collapse. What you need to understand is how to be prepared in a bull or bear scenario. Housing prices going to the moon are definitely a function of loose monetary policy and so much money sloshing around in an economy looking for a place to be stored to protect themselves from that 9+% inflation that is being experienced in the United States. But if the Federal Reserve is going to continue to aggressively raise rates and they are going to conduct quantitative tightening, naturally, housing demand is going to fall. And if housing demand falls, prices usually follow. Keep your head on a swivel, stay educated, and make sure you're prepared. Housing prices are the highest they've ever been in the United States, both for brand new homes and the average American home. So naturally, there's a reversion to the mean, which means you just need to be prepared to be able to weather the bad times.